Good morning, Chris, Juan, Cliff, Peter, everyone. Did you guys make it to the webinar yesterday? We got lots of emails. Everybody liked it. Except one guy sent me an email. Didn't like it. Didn't like Dan picking on Tom. It's a more of a alignment with his methods or what have you. And he said, if you guys were really professionals, you would have invited Tom to talk about this. And I said, Dan has already done that. Dan already did that. No response. But if Dan says something nice, the email comes. Anyway, to each his own, right? Let's see where the markets are at here. So it looks like, unless there's a surprise, we have to assume this market's going to march up to new all-time highs. All right, what you can see there on the weekly time frame. And one of the things I added here this morning to these charts was to mark the pivots. Now, pivot, nothing more than 3 higher low bars to the left and the right. And I could have set that to 2. I could have set it to 4 or 6 or whatever. But 3 works out pretty well, trying to catch, the meaningful pivots without, giving up too much. But so one of the things to take note of here is, like, as we use pivots, where are the pivots on the weekly chart? Right? There isn't one marked, not a single one, not a high, not a low. And granted, we're compressing the data by definition by looking at a weekly chart, but it's unusual not to have a swing low or a swing high. And the message there is that the buying has been, so strong and unrelentless that there's essentially no correction other than a momentary stall in momentum, like there was right there or right there, which is really meaningless as far as this time frame. The biggest correction was a red bar that turned out to be ignored, a rather large red bar that was ignored, and a topping tail that was ignored. And so this week started with a gap higher, and so far there's been no attempt to move down toward that gap. So more bullish price action. And so the message here is that buyers are in control, even though it becomes pretty evident on a smaller time frame that sellers do take control, only to give buyers the opportunity to pick up more shares and then push it higher. And here, this breakout failure, which historically would have led to, let's just say, a couple of weeks of choppy price action or a test of minimal, the 200 MA, which was just below in an alignment down here with this major support. There's an unfilled gap down here, which is left unfilled. And now the markets continue to push up. So we continue with our factory work. Yesterday's low is our first reference point of support. Yesterday was an inside day. It went nowhere. We talked about that being a likely possibility and actually a good thing as far as a continuation after the gap, because of the gap creating the void below. And so with a gap comes a void, but also comes immediate gains on the gap up, which, would just bring in sellers to say, hey, let me take my profits here. But whatever profit taking there was, it was meaningless because the buyers just continued to show up and take whatever, even at the levels near the prior high. So is this becoming the proverbial irrational exuberance? Well, I think it's getting there. It's getting there. Option traders continue to step up here, buying calls. There wasn't an extreme yesterday as far as call options, but it was close. Yeah. So this is the day-to-day put call option activity, and this is breadth, which has now gotten past the zero line and pushing up near toward the extreme, and our moving average of sentiment is kind of hovering up there. So maybe, and I kind of welcome it, to tell you the truth, an accelerated move to the upside right up into this area and new all-time highs. And that acceleration after a gap would be a very good indication that this move is over. Now, move being over doesn't mean collapse, by no means. Here, it only took 3 weeks of moving up to get prices moving back down. So we never know how it's going to play out, whether it could be 3 weeks or 4 weeks, whatever. It's going to happen. But if prices just shoot up to make new all-time highs, we'll have CNBC with the party hats on, and next new all-time high, and the internals will move to extremes again, and we'll know that we're in for a corrective price action at that time. But that being said, without a, I guess, larger sideways move to create a void below, we've got on the daily chart anyway these reference points. So, looking out a little bit longer term with an idea that if prices did make new all-time highs, our internals are at extremes, we get some choppy price action up there. This level, let's just say right around here, this 271-ish level, that's going to be your significant support level on any corrective action, where we'd actually be looking to be buyers. And, assuming that it's just not a collapse down there, there's some kind of corrective price action that makes sense to us, the way we view that kind of price action. So anyway, we'll see how it all plays out. As we come into any new day, we look at what's the prior day's high, what's the prior day's low, where our current price is in relation to price resistance to the left. In this case, since prices are going up, where are they in relation to more significant support down below? Where's our major support, which is right down here? And then from an intraday point of view, we look at the hourly trend, which you can see is up. And there's more pivots here because we're then expanding the data. So as you expand data, you're going to get more pivots unless it's a real power uptrend. Right? So as things went sideways here over the last couple of days, it created, that was actually last week, I guess. No, last couple of days, it created a resistance area, and buyers created a support area. Trading range. That's what a trading range is within an uptrend. And then there was the gap up and so on. So what was resistance becomes support. There's a gap here, and that's your intraday low. And step by step, we have our reference points. Well, Tom's saying daily needs to digest. Well, maybe not yet, Tony. Maybe at this point, it's just going to run straight up. I don't know. It could digest. And if it does that, it could come down into this unfilled gap area where buyers would want to step up at that point. What it's going to do from here, I don't know. I mean, I know where support is. I know where resistance is. I know if it breaks today's low, the next reference point, the prior day's low is right there. But as I look at the hourly chart, you know that this area down here is important to us as intraday traders, because if prices were to slice down through this level here, this 285 level, it's going to violate the hourly trend. It won't violate the daily trend, but then you then begin to reverse the whole interpretation of price action, meaning this is no longer in an uptrend. Maybe it comes down here to the unfilled gap and it starts bottoming and forms pivots. And, we just interpret it. 60-minute kind of digested some already. Well, yes, this was digestive action. Absolutely. So here, prices go up. They gap. That creates a void. I don't know if that's a real tick, if it really went down there or not. If it did, buyers stepped up in the gap fill and then turn up, right? No break of prior bars lows on the hourly. Pivot high, creates resistance. Comes down here, starts moving back up, creates support. Here, it broke down, right? So because as it went up there, right, it's the same interpretation, right? It went up and broke major support, the low prior to the higher high, but it didn't close below it. Rather, it sprung right back up again. Came up to resistance and chopped around, digesting that. And here we are up against this level, right? Up in here. So again, step by step, process of observing support, resistance, trends, and support and resistance being created and the location of where that occurs. And the cues are exactly the same thing, right? So we move that up to major support. And we continue the whole process. Do you think SPY can go to all-time highs without financials? I do. I think that I've seen it before. It's definitely something that needs to be concerned about should that happen, because you've got this major part of the market that it has some trouble, but we all know that they look like they were going to do a nosedive coming into Monday, and they didn't. So it doesn't mean that they're totally out of the woods here, but, that looked like it was down a nasty crack. And here it comes back up to where sellers should want to, take advantage of this. So what is it going to do here? And having named this market Mr. Schizophrenic about a year ago was spot on, because the reaction of just the break here is similar to, this, and then immediate turnaround and without any consolidation whatsoever historically is schizophrenic. It's strange. It's not the norm. But this is what this market is made of right now. Call it, to do with Trump and changes, draining the swamp. This Kukovitz from New York that's changing the world with attack on cows. Who the hell knows? But we're in a different world here, and markets change. And this is what makes trading through indicators and systems difficult. When systems work, they can be a wonderful thing. But when markets change, they play havoc. And by being the type of traders and investors that we are, that we can recognize change, right? We can adjust to that a lot faster. The big question is, for all of us, is that as human beings, we don't like change. We like things to stay status quo because we're secure with that. So the faster we can accept change, the greater the probability that we can make money from it or avoid, avoidable losses. So we have the tools to tell us about change. The question is, will we use them? All right, let's continue. Russell, right? Weak, but nice rally here. Coming up into resistance. Prices stalled, dipped down under the prior bars low, but buyers stepped up again. Bull kind of a flag going on here. Russell's up this morning, coming right up into this 156 area here where sellers will be waiting for them, and we'll see what happens. Transports bringing up the rear as they have over the last year and a half or so. This has been the typical price action of diverging and showing weakness, and then all of a sudden coming on strong to play catch up. They're coming back up to the old high here. We see the hourly uptrend. The Dow looks like a continuation pattern to me. The next reference point isn't all that far off, but those are the all-time highs up there. And after this multiple week consolidation, that should be an easy thing to accomplish. And if it doesn't happen, that's going to be a tell, right? So run up, several weeks of consolidation or refusal to go down, failure patterns here, and right back up again. That says buyers are saying, I'm coming for whatever you want to throw out here, right? I'm going to take it, and the market's going higher. And this is what makes failure patterns so powerful when you learn how to use them, is that, look, none of us can deny the strength of this market and that buyers are in control even when things look ugly. However, now that they've consolidated for several weeks, if they can't take this to all-time highs, something must be wrong, right? Because this pattern is supportive of that bias. So that's what I'm thinking. You should go up here and move up to all-time highs. Now let's see what you can do. Futures, let me get through this. It's getting late, so you can see they're going up. Same story. We just got 24-hour charts now. We've got the continuation. There's the Qs grinding up now, right? One up. That's not an up day, but turn around. 1, 2, 3, 4. That's 5 or 6. Let's see if we could do that. Dow pushing higher. Bonds lower, just what the bulls needed for bonds to come in. And as they come down, this comes down to support where buyers will step up again. Well, then they'll have something to worry about. Right? So what was resistance becomes support. Go to the shorter time frames, look for the slowing momentum in the turn. Gold, no love there, consolidating at the bottom of a wide range bar. And you've got your major support point here. So the question is this going to become a W bottom or a lower high, lower low? And we'll see where it goes from there. All right, so if you're long gold, you got to be a little concerned. You've got your line in the sand where if they poke below it, you hope buyers will step back up again and turn it around. We'll see. And oil is just the bull market that few talk about. And as we've talked about multiple times, what the hell is going on with the energy stocks? It's like, come on. You're being given, the fuel here to accelerate this, and all of these energy ETFs are just going sideways here. A red day yesterday, like what the hell, But I've seen this, and historically they're going to play catch up. Even if oil starts to correct a bit, the higher price of oil is supportive of them. So let's see what they're going to do. And that's it. Let me give it to Dan. I've taken too much time. Sorry, guys. All yours.
Yeah, no worries. Good morning, everyone. That's what happens when you love your work. We just keep on chatting. Yeah, hey, good morning, all. Sound 1A. Juan, hey, do me a favor and put everything to drop down, all panelists and attendees. So let's look at opens here real quick. LVS was our new addition for a put spread yesterday. I was looking at it for directional too. Wow, that 15-minute chart, even though it was over the doldrums right there, that was a bull flag into the 20 in the high part of the day's range. That was beautiful. FND, we're long stock. CPRT, long stock. We're already at 2/3 of it. Reg G, Yeah, I mean, but it's not liquid, so I don't know if that gap down is real. Just like yesterday, see, we had a gap down and that was false security, but we did move the stop to yesterday's high. Abgo, we have a put spread. We banked the money for the weekly one, but we also have one 3 weeks out at about 50% of max profit. That looks fine. XBI call spread is going to be a problem child here. Another breakdown failure. I mean, our entry, folks, was under this ugly red bar. And it's a greater than 100% retracement. Our stop is 92.50. I'll keep an eye on it. Let's not do anything for the first 5 minutes. At a minimum. I'm just gonna, there's mixed things right now. We still have the call spread on the CGC, locked in a profit. PCH, so I have a lot of things on my long list. Yesterday, we built a lot of bullish watches. Spiders, diamonds look higher. IWM's the only problem child, as Greg showed at resistance. This one was the one reverse head and shoulders on the weekly that I like. I'm waiting for a daily setup, and just chopping around here with a shallow retracement is strength. Zen looks great as a directional and put spread. Now in OW we had it as a put spread, but I canceled it because of the deep retracement, but it's still worthy of watching while it's still on my list. Delphi, we're long stock. It looks fine, closed with a doji bar, 50% into the real body. Cyber, still on my list. That's a churning uptrend. Cisco's been strong, but I can't chase it now. PFGC, coming in. IBM, we're long stock. BLL is on my watch list over yesterday's high. CHUD, CHD, bullish all time frames. Let it set up. COLM, COLM, bullish daily, weekly. Let it set up. TDOC. I got no interest in that anymore. It was a sell setup here, but we like sell setups that are at resistance. So I'm going to delete that out of my list. Loco, I think Christopher mentioned it yesterday. I said watch it on a bounce, but you needed a 15-minute bearish pattern. And look, you did not get it yesterday. I like M tops as my intraday pattern of choice. Pan W, that's a mess. Fleur, it's at resistance. It has to go sideways for a while. FNF is a 1, 2, 3. Noble, we'll keep an eye on. Weyerhaeuser, that's a nice 1, 2, 3. Teradyne, Teradyne I said was a beautiful trade today. Let me put that in a window. I wanted it to be a 1, 2, 3 for today, and it like already hit. Slim, it was a short watch, but nah, it looks doggy. FedEx, even though it's a red bar, the weekly, if it can break out. Delta Golf, we put on a call spread yesterday. I think that Etsy was a watch as a put spread, and it still is a watch. Let's look at some gappers here now in the last minute or two. CAT got a downgrade, and next week our MT Live is, today it's on trading cannabis stocks, next week it's on trading news. So our approach is the news just brings us to the chart. So CAT was gapping down here, it's sloppy, it's down marginal, but there's no pattern. I also like looking at its cousins, Deere, and so Deere was up this morning when the other analyst was saying, you know, slow down in the industry. And this has to set up for a while. SIG had earnings. I don't like it. It's too volatile pre-market here, but 28, that's worthy of a watch. Put him there because it's a price void above on the daily weekly. 53, this is a gap breakout. It has room, but I don't like the big gap after this big move, so it's not tier 1 to me. X, I was just watching this as a bottoming pattern for a put spread. GME had earnings. Remember, this is a beautiful short setup, and we actually shorted it under that the small little topping tail. That was a beautiful short, but now it's earnings and getting shellacked on earnings. AMD is up, but you know, resistance, I'm not chasing that. There's a little Bitcoin from yesterday. So this one I have delayed. Well, this is weird. It's printing up here, but it hasn't printed on the daily yet. I guess there's no prints yet. Lift we were watching yesterday, maybe as a counter trend move, 15-minute. If you look at pre-market as its head, this is the bullish reverse head and shoulders. I have lift up here in the upper right. Riot was in the sector yesterday of Bitcoin, WBA. These are all just leftovers now. Satish, that was a beautiful bull flag on the weekly. Autodesk was a little 1, 2, 3, not a huge target, but a nice day trade. We should switch. VFF, nah, calm. Calm is still, hey, trader, see if we can get a put spread right here.